Okay, everyone, and welcome to the post FOMC wrap up on September 20th. Here with myself, Michael Nauss, chartered market technician with StatsEdgeTrading. We're going to go quick because, yes, a lot happened, but no, a lot didn't actually happen with FOMC. So we'll go through all of that. Again, make sure you are signed up for the email watch list. Go to StatsEdgeTrading.com. You can sign up for that. You get access to my watch list, get access to all of the screenshots, and make sure this is emailed directly to your inbox completely for free. So, as always, we're going to start with Bitcoin here. Pretty do-nothing day here for Bitcoin, considering what we saw on FOMC, where this kind of fell apart, rallied back up, but we're still really inside this range right here. Taking a look at a couple of things that I'm interested in on the currency side of things, we have GBP, or sorry, pound yen, I should say. So we have pound yen pulling into this area, which I just drew with this high right here, and then this high right here. So we're inside this area, and we've been, downtrending for a long time, but really kind of creating this tightening type pattern as we move further and further down. So a bounce here is interesting to me on pound yen. Now we have Aussie yen right here, which has been a bit of a crazy guy. We were looking for it to break this zone right here. We got that. Then we got a whole bunch of action. And then we were looking for this break right here. We got that too. So that was a good one. Big topping tail, though, on FOMC. And then speaking of topping tails, we have silver, which is right here, right? Big push up into this upper VWAP. And we also have gold, which I was talking about, hitting this upper VWAP. As we came back down, I took the remainder of my profits here. However, we're still kind of in this range. That's going to be a theme going forward. So if we can just kind of consolidate, we have a rising 200-day moving average right here. If we can consolidate around that for a push higher, that's the bet I'm going to make on that one. So into the equity markets, we're just going to look here at the spot. And with the SPY, I already have it drawn out here, just range bound still. All right, we opened up today. Everything was sunshine kittens, and then they released the FOMC chat where he was just chatting about whatever it is they talk about, and the market didn't like that. However, we are now still within this range. So we broke outside of kind of a tighter range that we were in, which was this range right here, but we are still within this range right here. So, is it bearish, more bearish than it was yesterday? Absolutely. But until this range resolves one way or the other, we're still in no man's land. So I'm not really going to take a bet one way or the other. One interesting thing was KIE when I was going through my ETFs. This is the insurance ETF. And you see the 44 area right here? That was a big level. We came right back up to it, put in a topping tail today and reversed. So often, if you're looking to short insurance companies, might be a nice little push off. But is this all going to kind of be the same thing where we have the market dealing with overhead resistance and having to chop its way through, and we're going to see all these indexes do the same thing, which again just leads for more choppy action. So if that's what we're in for, that's what we're in for. One kind of saving grace, I guess, I was watching FedEx, didn't care. It was up pretty big after hours. You can see right here, 5.6%, resolving this pullback consolidation higher at 5.6%, up in the post market after earnings. So there's going to be some shining stars. Long story short, I still think we're in for chop. So tomorrow I'll be at Vegas. Friday I'm there until Monday. I'm going to try either in a hotel room or a airport like last time, just doing a kind of a wrap up as we see it there. So stay tuned for that. Make sure you don't miss it by signing up to the email list at StatsEdgeTrading.com, and I'll talk to you guys later.